Brandon McCartney is an agency principal at Allstate Insurance, where he's responsible for operations of a $3.5 million agency. He manages marketing, staff recruitment, community interaction, and hiring. In 6 months, he's increased customer retention by 5% and issued more than $175,000 in premium production. Prior to working for Allstate, Brandon was business development and account manager at Progressive Solutions, a marketing company. He handled the daily prospecting and selling to enterprise accounts and large companies nationwide. Mr. McCartney was also an agency principal at J&L Insurance between 1996 and 2008, where he increased profits by an average of 3 to 5% annually. His duties included managing the entire staff, day-to-day operations, sales, account management, profitability, customer retention, and growth strategies in target markets. In addition to being licensed in property and casualty and life and health insurance, Brandon is a member of the Direct Marketing Association, the American Marketing Association, and the Southern California Action Sports Network. In his spare time, Brandon enjoys snowboarding, surfing, photography, and spending time with his son Titus, also a B&I member.
No, that was my son. Here to talk about something very simple, and maybe somebody of you have seen this acronym before.
Yeah. Oh yeah.
Okay, so it can stand for a few different things. I like to basically consider it as cover your assets, just to be a little bit more moral with that. But anyway, so I'm going to read you a little paragraph that I wrote. Insurance is ignored by many and shouldn't be. While some might claim that insurance is merely betting the odds, I would loudly disagree. Regardless of the type, there is no insurance that I can think of that is not worthy of your time. It doesn't matter what kind of insurance you are talking about, and though it is entirely possible that we may never need it, it's the 1 in a million chance that when you do, that you should have it. Nonetheless, in this day and age, it's about CYA. If you're not sure what CYA stands for, again, see me after the presentation, and we can go over that once more. Yes, 15 minutes could save you 15% or more. Could very well do so. But that same 15 minutes could actually cost you thousands, if not hundreds of thousands, if you don't do your work and look at your policies correctly. So I'm going to give you a few examples. I found the best way to basically talk to my clients is to come from that trusted advisor side. I don't try to sell my clients. I try to educate my clients on what their risks are, better manage their exposure, and tailor insurance plans around each of their needs. So that way they know what they're getting and how it's working. The first example I can give you, and I'm sure we all basically drove a car here today, except for those who might have ridden a bike. Not quite sure, but it very well could be. For the sake of protecting the innocent, or rather the slightly ignorant in this case, the client that I'll be talking about in example A, I'll just refer to as Mr. I Have Enough. This was a client who was referred to me by a fellow colleague. He basically called me one day and he said, well, I heard your rates are good. I need you to basically rate my auto insurance policy. So I rated him out an auto insurance policy, and knowing that he was a homeowner and actually lived very, very close to one of my clients, rated a coverage that I thought that would be appropriate for him. After rating that coverage, he came back to me and said, no, I just want what I have with my other carrier. Well, examining his policy and looking at his liability limits, realized that basically he was not in any way possible. Being a homeowner and having assets, things basically 401k accounts, things to actually lose and protect, this person decided to put $25.50 on his insurance policy. And that's that limit here. What that is that stands for $25,000 per person, $50,000 per accident. So if he were to have an accident, let's say over a certain amount, he's only got $50,000 coverage there. Trying to educate Mr. I Have Enough basically kind of resulted in, I just want to save money. I just want what I have now, and if you can beat the rate, you can write my policy. So wrote his policy, because as we know, the customer's always right, or in some cases they think they are. So put the policy in place. About a year ago, Mr. Client had a loss of $386,000. He had a 3-car pileup, which he deemed he was 100% at fault in that loss. Mr. Client basically also had, as you can see, $119,000 in equity and also $85,000 in a 401k account, self-funded IRA. So both of these accounts are vulnerable in this situation, because with a liability occurrence like this, if you don't have enough bodily injury protection, they can come after what you do have. It could be college savings, It could be retirement accounts. It could be equity in your home. If you own a secondary residence, they can also come after those things. The first call that I actually received was from his attorney, looking for excess liability coverage, which he did not have. After advising the attorney, you could just hear the long pause in silence going back over his policy limits, knowing that his client had not, and he was very vulnerable. To make a long story short, we paid out what he agreed to on the policy limit, which was $500,000, and it left a balance of $336,000 that basically he is deemed responsible for. This can come out of wage garnishments. He might have to sell his home. There's a lot of things that might happen. So in this particular example, I would urge everybody in this room, whether they're doing business over directly with a direct writing company like Progressive or Geico, but if you have a good agent in place, it might benefit you to sit down and talk to that agent. Only reason being the difference between the coverage that I suggested and the coverage that he actually took was $27 a month. $27 a month. That's what he saved. Pretty much. So that was my example for Mr. I Have Enough. And again, I'll just use this one tagline again. 15 minutes could save you 15% or less. The second example that I have is for client 2. And after 13 years of doing this, you basically run into all these different people. But I call her I'm Too Busy, Miss I'm Too Busy. She basically was a client that loved to play golf, loved to spend a lot of time in Palm Springs and Rancho Mirage, always doing golf outings, never could sit her down to talk about her liability exposure. I had 2 properties insured with her, a rental property and also a primary residence. I loved to work with her. She was a great lady. We had great conversations. Doing business with her was actually a pleasure. But anytime I suggested a little excess liability is what we call personal umbrella coverage, she shunned away from it. I explained to her that this coverage was about $30 a day, or excuse me, $30 a month. And I know we've lost some of our attorneys in the group, but if we had one, maybe yourself, you could vouch for 1 hour of legal, usually is a lot more than $30 a day, or excuse me, $30 a month. So lo and behold, talked to her a few times. I do something in my agency which is called the CPR, and I kind of developed that acronym. What it ironically stands for is a customer protection review. So upon renewal, I like to call my clients, see what's changed, see if they might have gotten property, what their liability exposure is, so we can keep those plans custom tailored, because one does not fit all. So suggesting that liability to her, again, there was a vague response. Response was, I'm going out to Palm Springs, going to play a little golf, I'll get back to you. Well, Mrs. I'm Too Busy actually had some deteriorating stairs in one of her rental properties. She had a client step on the stairs broke. He fell about 17 feet from the top of the stairs to the bottom of the stairs. She was deemed basically 100% negligent because she's responsible for that property. The lawsuit basically that was deemed against her was $650,000 to date. We're still closing that claim. She ironically had $100,000 liability coverage. That's all she has. The coverage that I wanted to put in place for her was $1 million. It was $30 a month. So where we stand with her now is she's one of these exact cases where she has $360,000 in equity. She has about $255,000 in her IRA. She had $1 million on her liability account, or excuse me, $1 million in her liability coverage. So to date, she's basically in the hole for about $650,000. Talking to her about 3 weeks ago and trying to go over what she's going to do, she's decided she's going to have to sell that rental property to basically try and cover that expense for that tenant who actually fell through the stairs. So just in that way alone, it severely affected her lifestyle because ironically, like Gabe was talking about, she counted on that money as positive cash flow in her retirement. So these are ways that basically people really need to step back and look at doing things to cover their assets, more or less, to make sure that what you have out there and what you have at risk can be adequately protected. 15 minutes could save you 15% or more, but if you choose to give a good agent that you have, whether it's a State Farm, Farmers, just sit down with that person. But that 15 minutes could save you a lot more than maybe a gecko or a redhead riding a Harley. So that's just a little information too. But again, my name is Brandon McCartney, Allstate Insurance. Thanks so much.